What's going on, everybody? Brenton here for another live stream. So sorry if I wasn't here yesterday, you guys. I actually wasn't told that I was supposed to be going live yesterday, and I had a couple things that I was doing at the time. But I'm gonna actually be on here, you guys, for a little longer, just so I can give you guys as much information as possible. So this is gonna be like an hour live stream. Let me just set up and do one more thing before I go straight onto live. Give me a second. I want to make sure that you guys can hear me perfectly while I go into this. And I have a lot of information and techniques I'm going to show you guys today on how to maximize profit and how to make sure you guys are actually staying profitable while you're trading in the market. So let me just set everything up. Give me 1 second. I just didn't want to have you guys waiting any longer while I get to this. So, all right. So I'm going to have the copy of the comments. If you guys have any comments here, just please feel free to put in the section. Hopefully that they do add on. If not, I will be in the restream, or sorry, in the Discord after this and answering any of your guys' questions, concerns, or ideas. So I'm going to show you guys some amazing stuff today. Basically, it's going to be something that I've been using, and it's been making me a lot of profit. And it's been this formulation that I have been using for a while, you guys. But I just want to reiterate it and make sure you guys are understanding of it. So I don't use, as you guys know, I don't really use indicators that much. So I'm going to remove these indicators. I'm using this platform to just obviously do the live streams, you guys. I use MT4 platform for this. This is my platform. It's a little different, but I'll show you guys how I use these QMP filters, which is kind of like a signal indicator that I use. It helps me direct market. We're just gonna go straight into it here on Trading View, so I can be able to map things out for you guys and show you guys exactly how I'm able to make 4 or 5 grand a day trading in the markets. So this is what happens, you guys. So I'm going to basically structure in things that are really important, and we're just going to go and place them into perspective on the charts afterwards. So what we're going to do right now, what I'm going to do, if it allows me to, come on, guy. Delete this. Make a text. All right, cool. So I'm going to put market structure, placement. All right. It's a little laggy. I don't know why it's so laggy right now. Okay, so this is a market structure placement, you guys. So basically, what we're going to be able to look for in the near future is that the market placement is the most important thing in the trading field, in the trading world. Everything is based off market structure. Everything is based off human emotions. Everything is based off repetitive psychological patterns that have been integrated since the beginning of time, right? All of these elements have been given to us over and over and over again consistently, but we haven't been able to see it because we've been taught as retail traders to be living with these all of these different signal indicators, even EMAs, even Fibonacci, even harmonics, even any of those, you guys. It is helpful, but at the end of the day, you don't them. You just need to know market structure, okay? What are the daily market structures? How does the daily market structures work? And why are they in the way they do, okay? So first what we're going to talk about today is called whipsaw. So whipsaw market structure. So I'm just going to put whipsaw. All right, so whipsaw market S, okay? So whipsaw is basically when price decides to go from consolidation area during Tokyo session, right, which is Asian session. So we're going to talk about where the different type of sessions we're supposed to be trading as well. So Asian session consolidation. All right, so consolidation is usually during the Asian session. This is where most traders are trading as well, you guys. And I'm going to show you guys why you shouldn't be trading the Asian session unless you're a really good trader, okay? So Asian session is where the market makers build up their liquidity. This is where they build up market price. So market makers, if you guys are not informed, market makers are basically your liquidity providers, right? For instance, like I use Hugo Way Traders and the liquidity provider is the person dealing the money for you, or do the extra margin gain and actually taking your positions, right, on the other side. So market makers are basically the people that provide money. Provide. Can't spell. So money. Oh my God, I really can't spell it, man. Okay, so they provide money, and what they do is that they're providing money for you to lose it. So what they do is that, I'll show you guys exactly what happens. So this is the Asian session. The Asian session is liquidity trap. They trap liquidity and they build up market price during this area. So I want to show you guys why you shouldn't trade Asian session. Market trap for London, right, session breakout. I'm sorry guys, I'm a little sick today, so my spelling is off. I mean, I'm not really a speller anyway. I'm dyslexic, but it doesn't really matter. Okay, so London session breakout. So I'm gonna show you guys how this exactly works. Okay, I'm gonna show you guys exactly how it worked today, literally today. All right, so we're gonna go into price right now. Right here is considerably market consolidation, right? We're in consolidation right here at this area. Market price is showing liquidity to an area, right? Then we see the market breakout. So we see a breakout during London session, right? So London session, we see a lot of traders buying the market. So London session, breakout. So we have traders saying, oh, I lost this trade yesterday and I should have never lost this trade. This is a trade that I easily should have made $2,000 on, okay, guys? So I want to show you guys how to not make the same mistake. So London session breakout. So consolidation during Asian session, which is right here. So Asian session is here. Now we see the market spike to the upside, trap liquidity, right, by making these spikes. What they're doing with these spikes, what spikes are, you guys, is that they are opening pending orders. So what they're doing is that they're opening pending orders for a reason, because there's liquidity. Excuse me, guys, I'm a little sick today, but getting better. So the liquidity is all right here. What market makers can see that we can't see, you guys, is pending orders. They see all these retail traders pending orders. They see that, oh, if it hits this area, they're going to take a long position to go up to previous high, which is a standard trade, right? But we got to look at the days. We're at Thursday going into Friday. Friday is the end of the week. Why would the market makers push price back up to this area and close when they started an open price over here? We got to understand that they are trying to even their books out. They're trying to keep their books looking very, very, very flawless. So what they want to do is this. This is why you don't trade Asian session, you guys. Asian session, breakout to the high, stop hunt, trap liquidity, trapping the liquidity to this side, right? All these traders that think it's going to be a buy, even I was the one that said this is a buy yesterday, traps to the upside, induces a response, right? So what are they doing? They're inducing a response for you. Emotional faculties. Emotion drives action. What is emotion, you guys? Emotion is energy equals motion, right? In motion, right? Energy equals energy in motion. Energy in motion. So what you're doing is that you're essentially driving the energy from your conscious mind, your conscious thought pattern. You're driving that energy into... Sorry, guys. Looks like I was disconnected for a little bit. Sorry. I don't know why this is happening. So anyway, so back to it, you guys. So what happens with this liquidity trap is that they're going to go back and hit your pending orders, right? Hit your pending orders, liquidate, profit, and then they're going to move and they're going to close Friday's price where Sunday's price was opened. Where's Sunday at? Sunday was, this is the 5th. right here, right? So now they're even. They're essentially even on the books right now. So they don't have, they are not going to give you guys time. So what do? Why do they do this? Why do they do all these things? Why do they give you time to buy, knowing that you're going to lose your money? Because they are going to make money off you all the time until you understand this method. It's completely how the market structure is based off. It's a scam, you guys. Until you understand the Forex market, it's completely scamming you. You are unaware of what's happening. It's like completely like you guys go to those arcades, right? You go to those arcades and they always have those games and the prize looks so amazing, but no one ever gets them. It's because it's the same thing, you guys. It's a psychological battle. It's called the Hegelian dialectic. It means that they will give you a chance. They will give you an opinion. They will give you a thought pattern to work off. But they will not give you something to take home to the bank. They will not give you the reward. They will just give you an imaginary gift. That's essentially what the Forex market does to most traders. That's why most people think it's a scam. Yeah, it's a scam until you know what price really is and how price really works. So what happens, you guys, is that So let me go back into here. My internet's all set up because it seems like. So anyway, sorry, I'm a little sick. Going back straight into it. Let me refresh this page too. Jeez, I wonder why the internet is so slow. Okay, so what happens is wow, that was really annoying. Okay, now we're all set. So what happens, you guys, is that price moves from one area to the next and breaks the high. So how does market structure really work? How does essentially the algorithm of the market really work? Because at the end of the day, guys, the market makers are just an algorithm. It's just an algorithm that plays off human structure and human behavior and human emotions. That's the only way to predict a next move, is basically knowing how to predict the human structure and human energy. The energy field that we align to, that everything's aligned to, is actually interconnected to all things. So what they do is that they basically control your mind by giving you these false ideas of profit. They do it right here again. Peak formation high, peak formation low, consolidation. What I say, you guys, consolidation always leads to a trap. They are trapping you now, trapping buyers all throughout this area. Why? Because they want to give you hope. They want to give you hope and false hope to create a market trap. Another market trap right here. Consolidation to the lows. What are they going to do after they build up enough consolidation? Think of it like this, you guys. Think of it like sheep, right? Sheep are literally here to make wool and to, obviously, the beautiful creatures themselves, but what humans use them for is to make wool, right? So we can use it and sell it and wear it, right? So what do? We herd the sheep in, we get them all fluffy, right? And what do we do after that? We drain them. It's the same thing in all essential elements of the universe. We are all just the same elements, structure, right? So all we're seeing is the same thing. We move them up to the upside, we consolidate price, and then we move price back down. We do the same thing again. Make a W formation, consolidate price one more time, and then we move them back to the downside. And we do this enough times because no one really understands it. No one really puts in the education and the work and the dedication to really understand this stuff. They want to just be able to say, oh, I want to get rich quick. I want to make $1 million off trading stocks. I want to make money millions of dollars. Like, well, okay, but are you willing to put in that work? Are you willing to put in that effort? There's more to it, you guys, than just knowing an easy EMA or knowing identity and knowing structure. You have to know how the market moves based off knowing how human psychology moves. This is only if you're, trying to make those 7-figure years, 8-figure years. That's what you need to understand, is that we have to be able to be consciously aware of the decisions we're making based off our own emotions. Are we living in greed or are we living in fear? It's either one or the other. That's what over-justified optimism and under-justified pessimism is. That's what a stochastic is, you guys. If I want to put in a stochastic, right? Put in stochastic, it's the same thing. So I'll put in stochastics RSI. What is a stochastics RSI? What does it do? Stochastics RSI is this. Greed, fear. Greed, fear. Greed, fear. It's the same thing. It doesn't really matter. You can use any indicator. And all of them are actually the same element. They're all eventually going to add up to the same thing. So you don't want to use too many of these different structures. You want to be able to use them to provide and make enough money so you can take them to the bank and obviously, live off. So how do we do that, you guys? That's what I want to show you guys today. How do we do this? It's just knowing market structure. And I'm going to go in and out of it a lot today. So first, market structure is key. Knowing where market is. Where is the market? All right, this is pretty simple, right? But not where is the market, but how is the market using time against you? So how is the market using time against you? And you know why I'm saying this, you guys? How is the market using time against you is pretty simple. The market is using time against you because it has times like this, where they want you to think that there's this consolidation, so it's going to move out even higher, right? Going to break out. They're going to use this time to induce you, to fear you, to make you scared, for you to overthink. They want you to overthink. They want you to think negatively, because once they do, they got you. Because then that's when they're going to drive price the opposite way. Look, we can go on and on and on. We're going to do this actually. Let's do this from the beginning of this year, and we're just going to knock it all out. We'll show you guys this actually works every single time, right? So here we go. So this is the end of December, right? This is December, or it's January 1st. You see a peak formation high, right? A peak formation low, right? So I'm just going to map everything out so we can see it. Okay, so peak formation low. After we see the peak formation low, we see a rise, right? So we see a rise. And then we see market price retest previous structure high, right? Which is this area, basically. This area. So look left, structure leaves clues. That's kind of true. So looking left, structure does leave clues. So we're looking left, and we can see that previous structure is now support. Jesus, I cannot spell today. So previous structure is now support, right? So if I put a line here and see that this was previous structure, high, that was the resistance. Resistance becomes support, right? So now we can see that this is a buy. Considerably, we're looking to only buy now because we saw a peak formation low, so that means we're changing direction. So we can see that the first bounce is right here. First bounce is right here. Second bounce is right here. And now we can go long, basically, once you see this trap. So what are they doing? Why do they spike to the downside? Because they know that there's trailing stop losses in this area. They know there's trailing stop losses all across this area right here. That's why they shrunk price all the way down to move back up, because they want to induce you to make sure that you get trapped before they move price higher, because they need to make money as well. Proprietary investors are always trying to make money, right? They have kids, they have families, just like we have kids and we have families. Same thing, right? They can say it's a dog-eat-dog world. It really isn't, you guys. That's just a lie. It's a lie that we've been taught. So what we're seeing is a peak formation low, market consolidation, using time against you, because everybody thinks it's still a short. People are still shorting right now. Why? Because previous structure was a short, right? Because we were short previously. So people are going short at this time. Then they hit your stops, move price high, induce you long again, hit your stops one more time, consolidate price one more time, and then they go to the next level, right? And then what they do is, again, previous structure is now support. So we have another support line right here for this area. And we know about psychological numbers, but like all trends are usually on those psychological numbers. If you guys you guys don't know about those psychological levels, go to my previous videos. It will tell you all about that. So previous structure is now hit. So now we see market price is we can see that now market price is moving to the upside. So what are we going to see? Only buys at this point. So this is pretty easy, pretty simple. Bounce of the trend, you see market price move higher. So now market price is moving higher and higher. Okay, great. Now we're seeing consolidation again. Now we're seeing consolidation. So what are we looking for? So this W formation, if you guys don't know what W and M formations are, they're a market reversal strategy that is really highly profitable in the markets. If you guys want to know about that, that's in my other videos as well. You guys can watch those as well. Okay, so we can see that W formation to the low, spike back to the high, bounce to the low, and then move back to the high, right? Okay, perfect. All right, seems really simple. A, B, C pattern. A, B, C, D, right? Pretty simple. All right, cool. We're making money. Profits up the yin yang right now. I'm up 15 grand, whatever. All happy, thinking the market's going to go up even higher. Okay? Now they're going to do this again. They're going to consolidate. All right, looks like I was disconnected one more time. I'm actually going to change routers, you guys. This is so ridiculous that this is happening. I just got this brand new internet system in my house, and I just set this up in my office, and it's still not working correctly. So I'm going to change that this weekend, and I apologize for the technical difficulties. And hopefully if I get disconnected again, I'm just gonna have to set and wait till Monday, and or I'll just do a live stream tomorrow, because I have to go to I'm just gonna go to Amazon after this and get a new one, or I'm just gonna have some tech guy to come to my house, because this is ridiculous. So anyway, what happens, you guys, now is that the range of liquidity is now being trapped, right? So liquidity being trapped to the upside, right? Upside now is trapped. Now market price is moving back to the downside. Downside, trapped once again. Then they're going to move down. So the market price is just over and over and over again. Goes up, hit your stops, comes up, hit your stops, comes down, and hit your stops once again. Now hits all your stops, right? So now price hits you up in two levels. Now two levels, all your stops are being hit, right? All these trailing stops previously are now being hit. Once again, peak formation low, market anchor leg, which you know, market anchor leg is basically the anchor before a upcoming trend. What they're going to do now is trap all of the previous buying orders. Now they're going to be trapped, right? So market structure has been hit, consolidation to the high, and hit all the previous selling orders, and even taking back profit from previous orders that are still short, right? Here. So now we can see that price is doing this over and over and over again. Spike to the downside, spike to the up, spike to the downside, right? Same thing over and over and over again, you guys. So what do we see? What are we going to probably see here now? Same thing. Market price spike to the low, spike to the high, spike to the low, now probably spike to the high, right? But because we can see that on the daily range, that price is still consolidating, right? It's trapping. You see that price is definitely trapping, because the price could possibly, because we can see this is a peak formation here. You guys, you see the peak formation here? So we're not going to go short, because now we see a peak formation. If anything, they're going to trap one more time before they